Well, Bitcoin's the only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset.
In a world full of noise, one statement cuts through everything. From Michael Saylor: there is no second best asset. But here's the question no one is asking. Did he see all of this coming? Was this supposed to really happen? Back when most investors doubted Bitcoin, when fear was louder than conviction, Saylor didn't hesitate. He moved first. He deployed $250 million into the network, one of the earliest massive bets in Bitcoin's history. While others watched, he'd acted. Fast forward to today. What was once called MicroStrategy is now Strategy, and as of April 13, the company holds over 780,000 Bitcoin, quietly compounding with a 5.6% BTC yield year to date. But here's where things get even more interesting. They're not just buying Bitcoin anymore. They've unlocked something deeper: digital credit. A system where capital flows in through STRC, a preferred stock, and gets converted into more Bitcoin, fueling even more yield for shareholders, and it's spreading. Companies like APYX are openly saying, "We couldn't help ourselves," stacking aggressively. Another voice, Mark Harvey, warns this STRC thing is catching up, because the truth is simple. Everyone wants that 11.5% monthly yield, and right now, it's all pointing back to one thing: Bitcoin. So when Saylor says there is no second best asset, you're starting to see what he really meant.
So, I mean, I'm an aeronautical engineer. I have conviction in Bitcoin like you have conviction in using aluminum to build an airplane. And the reason you use aluminum to build an airplane is because if you use steel, the plane won't fly. So Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. When you go from 100 vol to 40 vol, your options market would go from 100 billion to a billion. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed, right? And so if Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result, and then all of the securities that we build inherit the volatility and the performance of Bitcoin. And we would, in essence, be destroying, we're crippling our own securities and crippling our own performance to diversify.
So do you think it's possible for MNAV to drop below 1 in a bear market? And if it does, how would that impact your strategy?
Yeah, I think an important point on that is sometimes I see like Twitter analysts saying, oh, this is just like GBTC and Grayscale went below 1 times NAV before. And what they miss is that Grayscale was a trust company, a closed-in trust, and we're an operating company. And a trust company doesn't have the option to refinance or take on leverage or to sell securities, buy securities, recapitalize, or buy their own stock back. And so when you should think of a trust company as no, I'm gonna pick the wrong metaphor and people will hate me. It's just a form of corporate entity that has no operational flexibility to manage its capital structure. Operating companies have much more flexibility. We can buy stock, sell stock, recapitalize. We can take on debt to fix or to close a gap. So at the end of the day, I think that the one example people have in the crypto market, Grayscale trading below NAV, was because it was a trust, not an operating company. Theoretically, here, when an operating company or a company doing something trades below NAV, it's because the investors have lost faith in the management team and they think the management team is destroying shareholder value by acting irrationally. So for example, if I were to give myself $1 billion a year pay package and announce it, the stock would dive and people would say, what if I just said, hey, I have $64 billion of Bitcoin, I'm gonna pay myself $1 billion a year for the next 64 years. People would lose faith in the company. They would say the management team is looting the shareholders. They dump the stock would trade below NAV. It's because the management team is doing something out of alignment with the interest of the shareholders that the stock would trade below NAV. Now, having said all of that, we constructed the company so that the company can generate yield and generate gains even at NAV or below NAV. For example, we have $64 billion of Bitcoin. If the stock were to trade to $1 tomorrow, well, we wouldn't sell the equity, duh. We would just sell the preferred stock. We would be selling stock over collateralized 10 to 1 against Bitcoin with a 10% yield, and we would generate billions of dollars of gains selling the preferred or the fixed income instrument. At some point, people would say, wow, they're generating gains anyway, and then the value would come back into the equity. Or we would sell, you sell a preferred stock. If someone's stupid enough to short my stock to $1, I would sell $1 billion of the preferred and I would buy back the common stock, right? And I would just recapitalize the company, right? And then the common stock would fly through the roof and then they would be complaining that we bought the thing that they were selling. So operating companies can do this. Trust companies, trust funds, ETFs, they can't do this. A closed-in trust can't do what I described. So the way that I see the world and the way that we see the world is when someone irrationally misprices something, then if it's mispriced too low, we buy it. And if it's priced at a massive premium, we might sell it, not to drive the price down, but just to capture the premium. And we construct all the preferred so that I sell this preferred that people want US dollar yield. I sell this preferred to people that want convertible. I sell this preferred to people that want Japanese yield. I'll sell this thing to someone that might want a euro yield. I will create this for people that want leverage. And ultimately, we're creating value. And if one of the securities trades weak, we either stop selling it or we reverse it and start buying it. And if you don't go to business school, then I'll boil it down to one sentence. Here's business school. Keep your options open, right? That's what you learn in business school. And how do you create value? You have to generate option value. So you'd say, well, why do you have that preferred and this preferred, and why do you do this some days and not do it other days? We're generating optionality. The more optionality we generate, the more opportunity we have. The Strife product. One day someone will start to talk about interest rates collapsing. Maybe there'll be someone writing a story about how the Federal Reserve is under pressure to lower its interest rates, and SOFR will dive, or the forward interest rate curve will dive, and Strife will trade up. And it has nothing to do with Bitcoin. It has nothing to do with our equity. It has nothing to do with the MNAV. It has to do with people's opinion of whether or not Jerome Powell is going to change his something. And so we're creating optionality into the credit market. Like someone else will say, well, I think the S&P is going to start to provide a credit rating for Bitcoin companies like MSTR. And then the price of those things will readjust and there'll be a huge surge of demand, and we will, if we have an ATM, when that surge of demand comes, we can sell $10 billion in a week. If we don't have an ATM and that surge of demand comes, we sell nothing in a week, and we talk to some bankers for 4 weeks, and then by the time we do something, the opportunity is lost.
BlackRock is signaling something massive for BTC. This is very bullish. U.S. Securities and Exchange Commission just received an updated filing for the iShares Bitcoin Premium Income ETF, backed by BlackRock. But here's what most people miss. This isn't about simply owning Bitcoin. It's about extracting income from Bitcoin. BlackRock is engineering a system to monetize volatility, to turn Bitcoin into a yield machine, just like Strategy's STRC. That changes everything. Because now Wall Street isn't just buying Bitcoin, they're building financial layers on top of it. Derivatives, income strategies, structured exposure. This is how traditional finance takes control of an asset, quietly. And here's where it gets deeper. While this filing itself isn't directly tied to the Clarity Act, it fits perfectly into the same timeline. Regulatory clarity is opening the door for institutions to move faster, bigger, and with more confidence. Exactly what Michael Saylor has been warning about. Bitcoin isn't just digital gold anymore. It's becoming the foundation of a new financial system. And the biggest players, they're not chasing it. They're reshaping it. Let's get more of Saylor's insights.
So the thing that makes our company a monster is having multiple ATMs in multiple capital markets, all of them correlated to different forecasts, like your forecast of interest rates, your forecast of Bitcoin volatility, your forecast of Bitcoin itself, your forecast of crypto policy. All of those futures are changing all the time. We're straddling that future, and we're able to either buy or sell or hedge any of them in real time, 1 million, 10 million, 100 million, or 1 billion, right? And sometimes you do nothing for you could do nothing for a month or 2 months, and then you could do $2 billion in 2 hours, right? So, and maybe you'll do something, consistently, but we built the business to straddle the crypto economy and the traditional finance economy, and to monetize volatility, and we're pretty thoughtful about how we do it. So, and this is the joke. If you're a closed-end trust and you trade below NAV, that's death. If you're an operating company and we trade below NAV, we just get to monetize that. That's good for me, right? I mean, arguably, the more irrational the market it is, the better it is. If you were to short our stock down to 10% of NAV, we would make billions and billions of dollars a day, right? And so we have a very anti-fragile structure, and I think we're pretty optimistic about the prospects there, because I'm quite sure the market will stay volatile.
Yeah. Okay. All right, cool. Well, let's keep going. Our clock is out, but hey, can I get another 12 minutes? I think we're running a little early. We want to get through some more questions. As long as that's good with everybody here, we'll keep rolling. All right, cool. All right, Michael, do you see Bitcoin starting as a store of value and eventually becoming a global currency like other forms of money have in the past?
I think if you read the history of the Rothschilds, the greatest bankers of the 19th century, they had a network. The Rothschild banks were the network. The primary capital asset that traded was sovereign debt. They were trading UK debt and French debt and German debt, par value 100, and they moved those instruments, bearer bonds, around very rapidly. And then that's how the entire banking network worked in the 19th century. And then when they did cash settlement, you know what cash settlement meant? Cash settlement for the Rothschilds in the 19th century. But I bring this up because Bitcoin's a peer-to-peer cash system, right? And all these people, like, they're always tweeting at me like, you don't understand what peer-to-peer cash is. Okay? When the Rothschilds cash settled a bearer bond transaction in the 19th century, that meant they traded the bonds for gold bullion or gold coin. And so cash meant gold. It meant metallic money, either in bullion form or in coin form. But even then, gold was too slow and too cumbersome to settle very frequently. And so there was a fiat currency, these bonds, trading over the cash system and the gold standard all through the century. And I think it's important because if you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from $1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yes, gold. But what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st century? Yes. What will circulate? Every form of credit of every credit-worthy counterparty, and then on top of that, equity, layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears. I don't see a world where it needs to disappear. And so I see a world where there are many types of assets, but the king apex asset, the root asset, which everything else is settled on, or everything else is oriented to, the center of gravity of the financial universe of the 21st century emerging is Bitcoin. Just like, that falls toward the center of gravity, which is the middle of the earth, and none of you have been there. That doesn't mean that it doesn't control everybody, right? Everything will be oriented in a frame of reference.
All right. All right, let's talk about AI. Elon said AI could 10x global GDP, and we know some of the value will flow into Bitcoin. So if GDP grows that much, does that massively increase Bitcoin's terminal value in your view?
In classical economics, they talk about the economy being driven by land, labor, and capital. The consequences of AI is digital intelligence, Bitcoin is digital capital. The consequences of the AI is that the AI is going to do the work of 1 billion people, then 10 billion people, then 100 billion people, then 1 trillion people. Then that AI will go into robots, and the robots will do the manual labor of 1 billion people, and then 10 billion people. And then it will go into your cars and your appliances and everything. And so what's happening? We're going to digitally transform labor, and the demand for labor as we know it is going to fall. The robots don't need as much space as we need, and the AIs don't need any space. So the demand for land as an input to the economy will fall by a factor of 10. The demand for labor as an input to the economy will fall by a factor of 100. What's left? Capital. Capital is going to explode. You know, you're going to have massively valuable companies that 1 million robots creating 1 million robots with like 22 employees that are worth trillions of dollars. Don't need the land, don't need the labor, have the money. Where's the capital going to flow? It's going to flow into the Bitcoin, right? I mean, if you create extreme wealth, right, there's going to be two types of people. There's going to be the people that bought the Bitcoin, and they're going to be privately wealthy, and they're going to live off of that, or something that is denominated in Bitcoin, right? And then there's going to be everybody that's getting wealth redistributed to them by political systems. There won't be a lack of stuff. There'll be infinite stuff. It'll be redistributed in a political economic process, which will be interesting. But the consequences of AI is that it's going to create massive amount of capital, and the capital that you're going to want is digital capital, because it's the best capital and it's the most useful capital. When the AI thinks 1,000,000 times a second and trades with another AI 1,000,000 times a second, they're going to trade with Bitcoin. They're going to trade with digital capital 1,000,000 and 1,000,000,000 times faster. They're definitely not swapping buildings. They're definitely not swapping gold bars or coins. They're definitely not going to trust anybody else's sovereign credit. They're not going to trust private credit, public credit, sovereign debt. They're not going to use cash. They're going to use pure digital capital in cyberspace. So it's all bullish for Bitcoin, and it's going to drive the price of Bitcoin up. And if you haven't figured out how to make money by putting AI into your business, that's hard. Then I give you the easy answer. You just buy the Bitcoin as much as you can buy, because we know where all the money is going to eventually go. The capital is all going to flow in the Bitcoin network, and the more everything else grows, the more Bitcoin is going to grow. So you could just go right there and then wait for the world to enrich you.
All right. Very, very bullish. So Michael, we started this initiative last year. Accelerating corporate Bitcoin adoption is the mission. This person asked a great question. Prescott, is there a point where one entity holding too much Bitcoin creates negative effects on the network or reduces its utility?
No, I think the network is, the protocol is protected by the distribution of the mining, the distribution of the protocol itself, the distribution of the nodes, the distribution of the holders, the distribution of the exchanges, and the distribution of the derivatives, and the distribution of the regulatory bodies on top of it. That's a global phenomenon. One company, if BlackRock holds 3% or 2% of the Bitcoin, or if Strategy holds 2 or 3 or 4 or 5% of the Bitcoin, it doesn't matter, because the price of Bitcoin went from 10,000 to 100,000 while we were pursuing that 2%. So it's like when Wall Street is 5% of Bitcoin, that means 95% of the 2.5 trillion is not Wall Street. When Wall Street is 10% of Bitcoin, Bitcoin will be at $1 million a coin, and that means there'll be nearly $20 trillion of not Wall Street money that will be sitting everywhere else, in the rest of the world, in the rest of whatever, right? The energy, it's impossible for anybody to take over Bitcoin in a hostile way, because the more aggressively you buy Bitcoin, the more you empower everybody else that disagrees with you. You see? Like, the harder I go, the more powerful everybody who took a different point of view becomes. And so I refer to it as a perfect machine composed of imperfect components. And yeah, the world's full of people that hold Bitcoin or have Bitcoin in a country you don't like, in a method you don't like, doing things you don't like, but they're empowering you. And the harder they go, the more they empower you. And so what happens is, like, what would happen if Berkshire Hathaway decided they're going to buy $100 billion of Bitcoin tomorrow to all the rest of us? Right? It's not hurting you. It's helping you. What happens if they do the opposite, right? And so I think Bitcoin is a classic anti-fragile network, and it's getting more stable. It's getting more conservative. It's getting more indestructible, more anti-fragile, the more that it is embraced by any entity, whether you agree with their values or not. They're all just strengthening the network against whoever is the next attacker.
Amazing. All right. Well, we are running out of time here, so we're going to wrap it up. Michael, thank you so much for being here with us. Thank you for your leadership. Give Michael a warm up.